Yo, guys, want to go over a few things for you to sit on over the weekend. Here, let me make sure my screen's up there, right? Okay, so overall, we know the market has been right in between, back and forth, theme hot potato, we've been calling it, right? And I mean, I'm gold up. Um, what I want to talk about is essentially how to um, protect yourself in these periods while sticking true to your system. So, for example, we got a gap up on Tuesday. We established the low for the week on Monday, which was nice. Undercut into the bull gap and held. Tapped up in, put in a higher low, held this 710 range. Followed through yesterday. Up 1.4%, remounting all the moving averages, which were still, by the way, above all MAs on the QQQ. Here's SPY, same thing, just pull back to the 20 MA, riding that. So, market filter on this, right, would have you been willing to take setups? Like when you look at the SPY in isolation, ignore today's candle. When you look at that, if that were any chart, if that were, Nvidia or, whatever, people would be like, God, damn, like, posting their Weeble screenshots and stuff. So, um, it's reasonable to have been willing to be willing to participate, in these areas in good setup. So one thing that is that I really like to emphasize, and the way that I mostly buy stocks really helps in these periods. Sometimes the way that I'll sell stocks hurts because I am willing to pull back some unrealized gains versus get extremely aggressive into sells. And maybe I should adjust those sometimes, but I've always been kind of end up a bit backwards at that. By the time I end up adjust, like, oh, okay, let's sell some into day two or day three or even day one, if it's up 6-7%, all of a sudden those are the ones that end up going versus reversing. So I just like to kind of stick true to that as much as I can. But what I want to talk about is kind of how to navigate without getting into trouble, essentially. And this is something that we harp on all the time in the room and on live, and when everybody brings up an idea, um, to to make sure that it's guided by your stop and invalidation, and that's at the heart of the trade, because once you establish what a good looking pullback looks like, what the opportune group is or area of the market, and what a relative strength stock selection feels like, then it all comes down to just managing risk, right? And an example like MDB here, or an example like ServiceNow against the 20 MA. I mean, put it plainly, as simple as possible. Almost every buy that I do, 95% of them come down to a pullback and higher low and undercut and hold at the 20 MA. Undercut of previous day low, undercut of an inside day, gap down red to green, variations of that at the 20 minute, to put it as simple as possible. And when you look at something like MDB, you gap down, you reclaim $400 previous day low, and you've established a clean area to risk against, a clean invalidation. If you lose that low, then clearly this is not a higher low, or you're making a lower low after that. So this is a great area to risk against. Well, you might ask, well, what about this thing? It's essentially the same thing. Yeah, it is. We were talking about that undercut of 400 the previous day, and reclaiming, and I was fine, looking at that and taking an entry. I ended up passing that because I was taking Palantir and ServiceNow on that. But I'm like, guys, this is one that we need to continue to monitor on that. And really, that's how you buy things without getting into trouble. Because when you look at this and when you measure these stops and when you measure the risk on these of very, very reasonable entry spots. I mean, this is an hourly candle on the right. We can go to a 15-minute even. That you're looking at this as your maximum risk. And it doesn't matter whether you buy here or whether you buy here or whether you buy here, right? That intraday stuff doesn't matter. You can in fact trade only on the daily chart. I like to use the hourly to see these red to greens and higher lows on the hourly sometimes. You can only look at the daily, higher low, and manage your risk against. And that's $9 of risk here on this trade. And then very quickly, by the next day, your stop is at worst break even. I would say you sell if we close below the 20 MA. So therefore, your worst case scenario is essentially a $14 gain, which was already one and a half, of your risk. Okay, right there. And then you look at something like, Snowflake here. Yeah, higher low, right there. But even if you get, kind of chopped up a little bit in here, these losses are so minuscule, right? I mean, that's your risk right there. Okay, now that's your risk right there. Okay, now that's your risk right there. I mean, you're looking at, if you combine the gaps of these stops here, by the time you get one to follow through for a few days, and then you get your stop in profit or to break even, you're looking at, again, ridiculous risk to reward numbers, 8 to 1, 10 to 1 on some of these. And it all comes down to, buying stuff that is in such a tight spot. There's a quote from from a market wizard about, I want to be buying as close to the danger spot as possible. That doesn't just mean buying, falling knives and, saying, AAOI as it's pulled back from 200 to $80 is a buy. It's cheap now if you liked it at 150. No, it's about buying as close to the invalidation spot as possible, where the thesis is invalidated, where the trend is invalidated on the higher lows. Okay. And these truly do that. And I believe that you could quite literally blindly participate this way with such tight risk. And you'd have a low win rate, a 20 to 40%, less than 40%, but the risk reward metrics skew it in such a skew the profit factor in such a way that once you add in a few filters for relative strength, for group participation, and for market participation and environment, it becomes it takes away some of that anxiety and fear and wonders about what the market's going to do, about what this number means and what that number means and what this commentary, around everything else means and what's going to happen in 2027 and what rates are doing, it takes away those wonders and worries and outside concerns, because that this is my stop. And if it hits, then then that is not a higher low, then that is invalidated. Okay. And then you just adjust some of the frequency of the trading based on, again, some of those market filters, some of those additional layers that you bring into the market. Um, one of them is Amazon. Again, I've got variations of essentially the same setup because, this is a gap up, pull back to the 20 MA. Now, did we hold the 20 MA? I didn't try this anywhere in here because I was in, TQQQ from there at 68.60 spot. Here's a great example, actually. Again, a slight variation of that, but we were pulling into that gap, undercutting the follow through day low, and we were putting in a low. We sold off in the morning. We had this hourly candle to hold at 60, and then we started turning right there. In fact, it's a 30-minute pivot from Chartmaster. So let's just zoom into this. You see what the daily looks like over there, and then you zoom in to the 30-minute just to kind of show what was looking at right there. 68.60 entry, 60 low a day stop, 67.93. So I'll lower this by 5 cents. So just put 67.90 because I was risking 70 cents on this. Right there, 70 cents. And right now, even still today, after this ugly candle, right, with or Warsh and Jackson Hole and all the volatility, and you need to, sit on the edge of your seat and wait for it, right? Is it's all this, right now, for a $3 gain or what is that, 4 to 1 risk reward? over 4-1 risk reward. 4-1. So that means a loss on RBRK, all things constant, a loss on RBRK. This afternoon as I tried to buy this, as it pulled back and put in this, 30-minute candle, right? There's one. But still up 3R, when considering these. And then you factor in, a MongoDB and a net, as you pull back and remount the 20 May here, yesterday, right? There's that look is again that hourly go signal, and then you're kind of retesting that hourly flag, all within the daily of essentially the same setup. Cybersecurity pulls back in, looking for a higher low and dancing around that 20 May using the hourly go signals, higher lows, cycle of price action. But most importantly, buying close to that danger spot. And I don't just mean buying a falling knife, I mean presence of buyers, clear invalidation, and area to risk against. And you'll find your market worries will wane into non existence. Okay. But once you get roped into all of the additional factors of the market, of all the confusing narratives, if you will, that's when you start to drift from the core strategy of risk management, tight stops in leadership groups when the market is above the key moving averages, or when the market is holding a support area, whatever participation metric you might use. Again, it sounds quite simple. You add in a few of the variables on top of it. There is some nuance with the daily setups, right? It's not just, blindly into the 20 May, right? There's some variances of how the price is delivered around that spot, but it's all from the core principle and core strategy of buying day one higher low holds against the 20 MA with tight stop, $4, $5, $6, depending on price per share, 0.5%, 1%, 1.5%, 2% risk. And then moving stop to break even, letting it trend for how long it's going to, taking profits into extensions, trailing the moving averages as they come through your entry and trim prices. And if you do that, I think your relationship with your trading and your relationship with the market and the simplicity of your strategy will bring a level of clarity to your trading that I hope you all feel at one point in experience, um, even when the markets are troubled, or challenging, and not throwing darts at a wall type of stuff. But right, because it's not always like that. So, anyways, have a good weekend, guys. Another long week, right? Taking a lot of mental energy. But this too shall pass. There are periods in the market that are more challenging than others, right? In a 20, 30-year career, right? You have to expect at some point that there's going to be a period in the market that, I think Kwamagi's got a phrase where there, or, maybe it's a market wizard. There's bound to be periods in the market where your strategy is worse than useless. um, what you do during those periods and then what you do when your strategy is more effective is what it comes down to as well. So see you guys, love you, have a good weekend, don't be stupid, drink some water, call your